a new high-yielding dividend ETF. I am pumped to talk about this one today, guys. It was called out in the comments on the last video by a couple of different people, which I really appreciate. This one is a new NEOS fund. So if you're familiar with QQQI, SPYI, those are other NEOS funds, and they yield roughly 12 to 14%. This one is very new. It's been trading for, I think, under 2 months. So we're going to go into it. We're going to talk about it a little bit, talk about how it's different from the other NEOS funds, and then we're going to do a bit of a projection analysis to see how much money you would make if you put in $10,000 into this fund and it traded sideways but continued that distribution rate over the span of 10, 20, even 30 years. So as always, if you guys enjoy this type of content, please consider subscribing and liking the video. It helps me out a bunch, and only 10% of my watchers are subscribers, and that is okay. I like you guys being here regardless. So let's go ahead and jump straight into this. Looking at the NEOS website for IWMI, I had to refilm this section. I lost the footage somehow, but we're back anyway. So we're going to go over just the website quickly, and then we're going to jump into the fact sheet, which is very similar to the other ones for SPYI and QQQI. So looking at all the benefits of this kind of strategy, it's the same thing as we've seen with the other funds, but they are working with the Russell 2000 index. And so they're implementing the data-driven call option strategy that we've seen for monthly generated income. Now, actively managed funds like NEOS, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting, which I love. I love this. So it is really, really important. It might not be as important if you're investing with less money. So if you're younger, you're maybe starting out on your investing journey like I am, just looking for some monthly income, the taxes won't hurt you as bad as, say, someone that's been invested for 30 years and has multi-million-dollar portfolios and whatnot. So taxes, they are always important, and so it's a good habit to start looking into them now and understanding how it's going to work for when you are at that point where you're way over 6 figures. The fund utilizes a call option strategy that may include both sold and purchased RUT index options, which may provide the opportunity for upside capture in rising equity markets, which we love. Now, same thing we've seen with all the other funds. The net expense ratio is 0.68, which is decent. You know, like I've said, there are some that are 0.99, some that are 1%. The net assets is about 16 million, a little bit less than the other funds, if I am recalling correctly. And then we can actually scroll down and see all of the premium discounts, market pricing, and whatnot. But again, there's not a lot of information on this because it is so new. There is a little bit of a dividend history, as we can see the last 2 months, but prior to that, there wasn't. And they don't even have a distribution yield yet, which is very, very interesting. It's all coming soon, I imagine. And then you can see their call put spreads. These are all calls, it looks like, which is just interesting. So once they get a little more information on here, I think it'd be really useful to come check this out. The fact sheet is the same kind of stuff we just kind of read through, the tickers and whatnot, as well as tax efficiency, income, monthly income generation, lower volatility, hopefully, and professional options management, which I really like because I'm not an expert at options by any means. One thing that is really cool is my QQQI. I was checking how my funds have been performing, and QQQI has been destroying the market lately. SPYI dropped a bit because SPY had a really bad couple of days last week, and so besides that, we can see, Russell, the Vanguard Russell 2000 ETF is 99.43% of the holdings, which we expected. And then you can see the portfolio management team as well. And then again, more of the same. They do repeat themselves quite a bit, but it is really useful to look through this information and see what they're talking about when it comes to these funds. And you may know these funds pretty well, but if there's other funds, you can also relate this material to those other funds that you're looking at and thinking about investing in. So what we're going to do now, we're going to look at the dividend history and make a calculation using the really reliable seekingalpha.com. I'm not sponsored by them, but we can see that they currently have it paying $1.15, which is just the accumulation of the first 2 dividends, and that's a 2.2% yield, but that's only for the first 2 months. So if you multiply that 2 by 6, you're looking at a roughly 12%, over 12% yield, but that's just quick math. So what we're going to do now is we're going to do a very, very preemptive calculation. And so the way this works is I'm going to try and calculate the dividend yield, or the assumed dividend yield, for the year. We can see the 2 payments so far have been 54 cents and 60 cents. A little bit of a spread there, but nothing too terrible. So I'm going to take 0.54 and add 0.60. And that gives us, they had 1.15, they rounded up a little bit. So that's $1.14 per 2 months. We're going to multiply this by 6, and that will give us the full year dividend. Now, so you may say, oh, you know what, $6, that's not a lot. But we take this and we divide it by the current share price of 52.15, and then we're going to multiply this by 100 to change it into our percentage, and you're looking at a 13% yield. So our quick math did work out pretty well for us, but still, if you guys know how to run these calculations yourself, I always recommend it just to double check. It's not that I don't trust Seeking Alpha or I don't trust NEOS, but sometimes I find an actual yield that's very, very different. But I'm going to calculate it as what? A 16.1% dividend yield for our calculations of investing 10K to see exactly how much money we will make holding this fund for the full year. Now, the disclaimer for this part, this could wildly change. The yield could go significantly up. It can drop significantly. So this is not in any way, shape, or form me saying this is what it's going to yield. This is currently what it is yielding, but again, off a very small data set. So let's jump into that calculation and see how much money we're actually going to make from this fund. So we can see I've inputted our data on dividend.com. Their reinvestment calculator, $10,000 invested, return rate of 13.1%, and the number of years is 1. Before I jump into the first calculation, let's remember that this is a crazy assumption based off a dividend yield that is not set in stone. It could go up, could go down, and this is a basis of if the NAV and the price action remain constant and the distribution yield. So if all of that remain constant, this can show you how much money you can make with the ability to compound. But that's very unlikely to happen. I often get people in the comments saying, oh, this is never going to happen. It's not possible. And again, I don't disagree with you on that. It's very unlikely for it to happen. It's just an assumptive calculation to see what you can make if it were to remain with these constant factors. So that being said, 1 year, you're going to make $1,310 your very first year in just dividends, leaving you with $11,310. With these funds, like I said, I like that you can have some bonuses with the taxes. And then after 5 years, it really starts to compound. And now you're making $2,142 every single year just from the distributions. And your total return of all the distributions or dividends so far is $8,506. Now, I always think it's important to note, I like when we see where our total return in dividends is the same amount as our money invested, which looks like it's going to be around 6. Yes. So at year 6, you have now made more in your dividends than you have with the money invested. And so year 6, you're making $2,424. But let's jump it up a little bit. We'll go straight to 10. At 10 years, you're now making $4,000 every single year, which is wild. Now, 10 years is a very long time. It is not going to go by quickly, but if you just put this in there and just sat, you're just making so much money. And if you're doing it in a tax-exempt account, you're not paying any taxes on this $24,000 you have already made. So now let's go to, we'll do 15. At 15 years, you are now making $7,000 every single year from dividends, almost double what we were at 10 years. So that's where compounding, it's going to keep getting better, better, and better. And now again, you have $53,000 instead of the 24. So your total returns have now doubled the last 5 years compared to the first 10 years. The power of compounding. At year 20, you're now making $13,585 every single year from dividends. And let's see, at year 18, you now make more than your initial investment every year in dividends alone, which is crazy. Total return is $107,000, which is beautiful. We're going to kick it up and we're going to say, let's say you are 25 right now and you want to retire at 55. You put 10K into this fund and it performs average. It just continues trending how it has been trending. The yield stays the same. What you would end up with as, you know, when you were ready to retire is a fund that is paying you $46,000 every single year. In total, you have made $391,000 in distributions over this 30-year period, which is crazy. So if you think about it, you start with 10K and you end up with $400,000. A wild return. And so that's the power of these funds and the power of compounding interest. So when it comes to NEOS, like I said, I really do like these funds. They have a number of them. We can see SPYI is still 12%. QQQI is at 14.48%. The other ones are a little bit lower and not as popular. But still, it is really interesting to see how more of these funds are coming out. And I will keep putting out videos, the more I hear. So if you guys have different ETFs that you like, or even stocks as well that pay a nice distribution or a nice dividend, I'm always interested in finding out. If you want to watch any of my other videos, I'll link a video to SPYI and QQQI at the end of this video in the comments. And if you want weekly dividends, there's a new couple of funds putting out weekly dividends at insanely high yields. So check those out on the channel as well. As always, I appreciate you guys for watching, and I'll see you in the next one.